How's it going, everybody? Today we're going to be talking about HIMs and how they have a high five setup, my personal trading strategy that I use. I just posted on X a few minutes ago talking about 5 different stocks I'm going to be talking about, and HIMs is first up on the list. So stay tuned for the other 4. So my high five strategy basically takes into consideration some sort of charting pattern, a volume shelf or volume gap, the MACD, the RSI, and the stochastic, which is your trend. HIMS lines up perfectly with my high five trading strategy because, one, as we can see on the chart, we have a breakout of the handle of the cup and handle pattern on the weekly chart. We have 2, a volume gap off this volume shelf right here. 3, we have a crossing upward and uptrend of the MACD. We have an RSI that is uptrending as well. And we have the stochastic that is in the sweet spot of trading on the weekly as well. So we have 1, 2, 3, 4, 5, the high five trading strategy setup, which again is my personal trading strategy setup that tells me when to enter a trade. And if we're looking at our price targets for this, we are going to be measuring out the date. So it's about 1,372 days. So that puts us in 2028. I know it's a long-term setup, but these things can move a lot quicker than the initial the rated time essentially. And here we took the measured look, which is about 2,276-ish move, which puts us at $48.55. Now that we looked at the chart and what the chart's telling us, I'd like to kind of go over my discounted free cash flow model that I have for HIMS, as well as I am a long-term investor in the company, and I have some trades and options going with this name as well. As we can see here, we got HIMS pulled up. We got all their updated information. We have the discounted free cash flow, which is one of Warren Buffett's favorite tools to use to value a company and to determine if he's going to enter the company or not. And I do the same thing. I have a couple extra added things that I put in this this homemade basically Excel sheet that I built from the ground up. So you have your free cash flow yield, your current and your forward. You have your current PE, forward PE, and you have your PEG ratio. And essentially, I have a high five trade strategy. I have a top 6 valuation score, which they have a 4. Their free cash flow yield is between 2 and 3%, which is okay, not great. We want above 3%, but for a high growth company like HIMS, I am okay with paying that. Their PEG, their price to earning growth score, is 0.40. Anything less than 1 is very good. And then we are looking at a free cash flow margin rate of 8% for the next 1 to 5 years, and then a free cash flow margin rate of 15%, bumping up from 8% over the last 6 to 10 years of this 10-year free cash flow model and valuation metric. We have only a multiple of 10, which just means basically at the end of the 10 years, this is going to be the free cash flow multiple assigned to HIMS. Now 10 is 10 is the baseline for what Warren Buffett and the greats use, but I believe that it could be put to a lot higher, like a Tesla or a NVDA, where it's 30, 40, 50 free cash flow multiple. So many of the growth companies and moat companies have such a high free cash flow multiple. So that being a 10 is only because if I change it, we're going to get some crazy intrinsic value, and the stock's going to be a buy for a very long time, which I do believe that. But I'm just going to leave it at a 10 because I feel like that's a very safe, very, very safe number. We have current free cash flows at about 89, almost 90 million. We have a revenue of $1.4 billion. We have a net cash positive and there is a decent bit of stock-based compensation going on, but it's early day company, growth company, so I'm not too worried about it. Even here, it's still a buy. And then we have our outstanding shares. So the PE and the forward P are kind of crazy, but there's a high growth company with 25% growth for the foreseeable future. I was even very conservative on my growth rates here, and everything's calculated out to just spit the numbers out in here. And these are the things you really want to worry about, right? So you want to be buying it with a good margin of safety. I say anything 10% margin of safety or more, you're getting a good deal. It's currently a $22 stock. So we're getting about 38-40% of margin of safety. And I continue to update these numbers. So trimming here, we might not be trimming as earnings keep coming out and the company keeps getting better. These numbers will keep going up. It's whenever these numbers don't go up and we highly exceed over here, I would start to trim these positions and then buy back into here. Again, holding for the long term, but I kind of created this current margin of risk strategy. I don't know anybody else that has something like this to actually tell you when you should trim out of a position slowly. 10, 20, 30, 40, 50% of your positions start trimming out of it. Because as we saw with Tesla, the valuation can get way ahead of the company before the growth rates, and even if they're hitting all that, it's already all priced in. So I believe this to be very key for investing long term. Now, they did 55% revenue growth this year, and again, I said I'm being conservative. I see them doing higher than these, but I'm being conservative. 35, 30, dropping down to 25s, 20, and then all the way down to 12% by the end of the 10-year mark. Again, they are in a great space and they're disrupting healthcare with their online models and really vibing with millennials, Gen X. So I really can see them growing at faster clips than this as they disrupt the healthcare space. So we have our fair value at $35. We have our charts lining up for a big cup and handle, and I believe this to be the next big retail mover. After we just had a huge move in Palantir, we're having a huge move that's not done yet in SoFi. We had a huge move in Tesla recently, which isn't done either, I don't think, based on the charts and my other videos. So I appreciate you guys all joining in and staying tuned. If you made it to the end of the video, like, follow for more, find me on X. Thanks, and let me know in the comments what other great retail stocks or other stocks you're looking at on a trade standpoint. With my high five strategy you want me to go over, and or you want me to look over my discounted free cash flow valuation metric model. You want me to plug any of those companies in, Celsius, Amazon, Crowd, any of it. Awesome. Thanks. Have a great day, guys.